Friday. Good afternoon, everybody. Good morning. Sorry, everybody. And happy Friday. Today is January 19th, 2024. Apologies for the grainy picture and the echoey sound. I am on the road today, so we are at an undisclosed location, totally not disclosing the location that shall remain not closed, disclosed, unclosed. Anyways, the top story this morning, stocks making new all-time highs. It looks like the S&P is set to open at an all-time high. Things were not looking so good for stocks heading into the last couple of days. But you know what? Mag 7 to the rescue yesterday. We had that head scratcher of an upgrade for Apple. That came yesterday morning from Bank of America. Why did they upgrade Apple? Because they talked about strength in the iPhone upgrade cycle. Curious, because that came on the same day as Apple announcing they were cutting iPhone prices in China. Well, if the demand is so strong, why are they cutting the price? And laughably, they were talking about, high expectations for the Apple Vision Pro starting at $3,500, plus maybe a discount for your physical therapist because the thing's so heavy, it's going to give you a stiff neck. Very curious that we would get that Apple upgrade yesterday, but that was enough. I saw some comparisons with the amount of market cap that Apple added yesterday. It was like basically a Starbucks. Like they added the value of the entire Starbucks corporation to Apple stock yesterday. And then the other big Mag 7 story that juiced markets yesterday was when Mark Zuckerberg from Meta, I hate that. I hate that rebrand, Facebook, they're buying 350,000 Nvidia H100 GPUs. Whoa, say what now? Some details were left out. We don't know how many they have already bought versus how many they plan to buy. They're talking about, hey, maybe they've already got 300,000 that they bought last year. Maybe they're only buying 50,000. Maybe they only have 10 of them and they're going to buy them all this year. Sparse details in this. They say by the end of the year, they're going to have 600,000 H100 equivalents. Again, details are sparse there. So I'm guessing maybe there's some AMD GPUs in there or some other chips. I'm not really sure what it means, but if we just take that 350,000 NVIDIA H100s, that's around $9 billion worth of chips. And again, we don't know how much that Meta has already bought or how much they plan to buy. But that was enough, of course, to juice NVIDIA stock yesterday because NVIDIA stock just goes up. It doesn't matter how bad everything else is. NVIDIA only goes up. And, well, this is real chip demand, right? I mean, Facebook, say what you want about Zuckerberg, and there is a lot I could want to say about Zuckerberg, but it is a legitimate business. So this is not another case of suspected channel stuffing by people with questionable reputations. No, this is Zuckerberg just buying stuff. Now, my big point is, when are they going to make money with this stuff? Every day there's another story about this outfit is buying $1 billion worth of GPUs, and this outfit, NVIDIA gave them $500 million, and they just turned around, handed it right back to NVIDIA in exchange for some GPUs. Is anybody making money off of this stuff yet? I think ChatGPT or OpenAI, maybe they're making some money. At some point, this is going to have to turn into profits. Otherwise, this whole NVIDIA chart is just going to be another stock bubble volcano chart, straight up and then straight down. So we're hearing all about the demand. Everybody needs compute. Everybody's building these models. What are they going to do with it? And how are they going to turn that into money? That remains to be seen. And I would just add, guys, remember the dot-com bubble. The internet was a real thing. The internet technology was real. But you know what? Almost every one of those commercials from the 2000 Super Bowl, almost every one of those companies is gone today. Most of them went belly up, just like everybody who went west during the gold rush. Most of them ended up, well, they're all dead by now, but most of them ended up dying horribly on the frontier. For every one who struck it rich, there were thousands that failed. So this AI mania, it's continuing. It's still popping up markets. And, well, it's probably going to continue for a while. Also, China is banning short selling. Wow, that's all our problems solved. Nobody's allowed to sell stock, right? More short selling bans. But the details matter. China's state-owned brokerage, the biggest brokerage in the country, CITIC, announced that they are curbing short selling. Retail traders, you're not allowed to short. You can't profit from a market in decline. But institutional guys, you're still in the game, although they are raising margin requirements for institutional short sellers. They're still allowed to profit from a decline in the market. You retail guys, sorry, you're SOL. taking away the sell button for you guys. It's awful familiar to what we did here in the States with the meme stocks. To say markets are rigged against retail investors would be, well, stating the obvious, putting it mildly. So, look, markets are rigged. This just in, breaking news, markets are rigged by the big guys in their own favor. With that, why don't we shrink my big melon of a head? Let's see what is going on in markets today. Don't forget that like button, guys. It helps get the message out. And if you're new, hit that subscribe button and have your coffee with the melon heads every day. It's usually a better picture and sound. I'm on the road today, so it doesn't look grainy and echoey every day. Right now, the S&P is set to open about 18 points higher, 0.4% to the upside for the S&P. Just want to show you guys this long-term chart of the S&P. This one is going back to about September of last year. Here is that just monster rip-your-face-off rally that the S&P had right up until the end of last year. And now we've stalled here. We're struggling to break out from these all-time highs. We're probably going to make new all-time highs, especially because the Mag 7 is ripping right now. But I just want to point out, look at this declining trend in the relative strength index. The RSI continues to make lower highs even as stocks make higher highs. That divergence shows that this bull market is running out of momentum, and it needs some kind of a bullish catalyst to break out higher. Maybe yesterday's Apple upgrade and what the Zuck from Meta and their 350,000 GPUs, maybe that's enough to break this market higher. We'll see. But for right now, that momentum is lacking here. The Dow is up 180 points ahead of the opening bell. That's about 0.5% higher this morning. And we have got the NASDAQ is up, 112 points ahead of the open, 0.66% higher for the tech-heavy NASDAQ. So people are just piling into those high valuation tech stocks. The Dixie is taking a breather this morning, 103.40. That's down 14 basis points, taking a break from another monster rally. I don't know about monster. It's been a pretty significant rally in the Dixie since the start of the year. We're not quite into monster territory yet. We get back up around 106, 107. We'll say monster rally. But for now, it's just a bounce. And looking over at yields, once again, yields higher in the middle of the yield curve, slightly lower on both ends. Again, the biggest move is the 2-year. The 2 is awful volatile lately. The 30-year Treasury right now is at 4.364. That's down about 1 basis point. The 10-year is up almost 1 point at 4.153. 2-year making the biggest move out of all of them, although it's not that big today. 4.389% yield on the 2-year U.S. Treasury. That's up a little more than 3 basis points. And the 1 month is at 5.386, largely unchanged from where it's been for quite some time now. Looking over at the commodities board, we've got February gold futures at $2,035. That's up $14 this morning, 0.7% higher. Good on you for the gold bugs. Silver's getting in on it, just barely up a penny. March silver futures at $22.82, up just a fraction of 1%. We have got platinum is up 0.5%. Palladium's down a little bit. And then crude oil, West Texas Intermediate March futures at $74.06. That's up 11 cents this morning. So not a lot happening in the world of commodities. But if you are of the persuasion that Bitcoin is a commodity, well, there's plenty happening here. Bitcoin down $1,100 today, trading at 41,303 according to Yahoo Finance. Once again, guys, it is on the news selling. Everybody was saying Bitcoin ETF proud to the moon. I tried to warn you guys it was going to be a selling of the news event. We saw that the day before the ETF was actually approved. I tweeted it out. I said, guys, everybody thought that one was real, and we saw the market sell off. The whales told us they intend to sell the news on the Bitcoin ETF approval, and that is exactly what they have done here. GBTC is getting hammered by outflows because they're charging 1.5% for their fees to manage their ETF when the competition is charging 0.25%. And Grayscale's CEO was on TV in Davos trying to defend his high fees, talking about his track record. Look, Grayscale, lower your fees or you're done. Nobody's going to stay in GBTC when your fees are 6 times as high as the nearest competition. But Bitcoin is also having a rough day today. Looking over at China, we got China's biggest broker curb short sales after stock rout. CITIC Securities has suspended securities borrowing for investors. They forgot to say retail investors. The big guys are allowed to do whatever they want. As always, China's largest brokerage has suspended short selling for some clients in mainland markets amid a deepening rout in the nation's stocks, according to people familiar with the matter. Pet peeve of mine, anonymous sources. State-owned CITIC Securities has stopped lending stocks to individual investors and raised requirements for institutional clients earlier this week after so-called window guidance from regulators said to people asking not to be identified discussing a private matter. CITIC Securities didn't respond for comment. Chinese shares have extended declines this year with no sign of a let-up after a harrowing 2023, heading for their worst start to a year since 2016, which you may recall was a really bad year for Chinese stocks. While it's not immediately clear how many brokerages are restricting short sales, the move signals authorities' eagerness to put a floor under the market after earlier efforts, including state buying of bank shares, failed to lift sentiment. The government is buying bank stocks in China. I'm sure that's totally good news, and there's nothing to see there. And I would just be a doomer. And this it would only be fear porn if I were to point out, hey guys, the government buying bank stocks, maybe that's something you want to keep an eye on. Not such a soft landing kind of talking point there. Forget it. I'm just a doomer. And another sign of official attempts to boost stock prices, trading activity in some major exchange traded funds surged on Thursday, pointing to potential buying by state institutions dubbed the national team. So the Chinese government is buying the stock market to try to prop up its economy and stem the decline. Need I point out that the government trying to prop up the economy, trying to prop up the stock market, that's like standing in a bucket and trying to lift yourself up by the handle. In theory, it should work, right? No, it's a stupid idea. It never works. It won't work. Don't even try it. But that's what they're doing. And I would add, we've got the PPT here in the States, the plunge protection team. So, in all fairness, the US does it too. It's not any smarter when we do it. We just do the same stupid thing. But just to give you guys an idea, this is going back about a year now on the Chinese stock market down. The Shanghai Composite Index down from about 3,300 to about 2,800. Really rough year for the Shanghai. I believe that's down about 12.5% over the last year. And the Hang Seng, that's the Hong Kong Exchange, even worse, down from about 19,200 to about 15,300. That's about a 20% decline in stocks in Hong Kong. So the rout in China and Hong Kong by extension is continuing. It is all tied to consumers and the wealth effect, and people are stopping their spending in China because of the collapse in the real estate market. When home values decline, people feel poorer and they spend less money. We saw that here in the US during the GFC. China's going to get it even worse because home values make up a far higher percentage of household wealth in China than they do here in the States. Here in the States, the average middle-class person is roughly evenly spread out among real estate, stocks, and bonds, right? The average person's got some equity in their house right now. When I say the average middle class, all right? Don't jump down my throat, millennials. I get it. You're broke. But the average middle class, you got a little bit of equity in your home, and then you've probably got a 60-40 stock bond portfolio. So you're about 1/3 allocated to the three major asset classes. In China, the average household has 90% of their wealth in the housing market. So the wealth effect is going to be a big deal for the average Chinese consumer. And the Chinese government is buying bank stocks and trying to prop up their stock market to stop it. It won't work. Shifting gears over to what the Zuck this morning, Mark Zuckerberg indicates Meta is spending billions of dollars on Nvidia AI chips. Mark Zuckerberg said on Thursday that by the end of this year, the company, their computing infrastructure will include 350,000 H100 graphics cards. It's about $9 billion worth of equipment, guys. We're not talking about a trifle sum here. These are huge numbers. But details matter, and details are few in this one here. Zuckerberg didn't say how many of the GPUs the company has already purchased. So for all we knew, a lot of these big earnings beats that we've seen in the last year, besides CoreWeave handing Nvidia back their own money, that could have been Meta buying up a lot of these things. We don't know how many were already bought versus what will be bought. But the H100 didn't hit the market until late 2022, and that was in limited supply. Analysts at Raymond James estimate Nvidia is selling the H100 for $25,000 to $30,000, and on eBay they can cost over $40,000. I doubt Meta is buying them on eBay. If Meta were paying at the low end of the price range, that would amount to close to $9 billion in expenditures. Again, big numbers we're talking about here. Additionally, Zuckerberg said Meta's compute infrastructure will contain almost 600,000 H100 equivalents of compute if you include other GPUs. In December, tech companies like Meta, OpenAI, and Microsoft said they would use the new Instinct MI300X AI computer chips from AMD. I'm going to pretend to know what that means. I really don't know what that one means. But what I do know is number go up. Look at Nvidia stock. Look at that 1-year chart of Nvidia stock. Up, up, and away. Look at a 5-year chart of Nvidia stock. That looks like a totally sustainable move. Currently trading at $579. Number go up. Nvidia keeps going up. All I'm saying, guys, is at some point, this growth will taper off. And Nvidia is priced on growth. The second they stop maintaining that growth, this thing's going to start heading lower. And if these companies buying these GPUs turn out to not be as profitable as everybody thinks they're going to be, which at this point, to meet the expectations people have for AI, is almost defies belief. You'd have to believe that every single person in the world is going to become unemployed and totally dependent on ChatGPT for everything, and might as well roll out universal basic income to keep the poor people fed. That's like the prevailing wisdom on Wall Street right now when it comes to AI. Maybe we're getting a little ahead of ourselves. I just throw them out there. But hey, you guys do what you want with them. Congratulations to the Nvidia bros. Your number went up again. I'm sure my Twitter inbox is going to be full once again. The internet does not let you forget when Nvidia stock goes up. Let's just put it that way. You guys are adorable. Keep the messages coming, and thank you for the engagement. Congress averts a government shutdown as conservatives steam over border and spending. This is in the Wall Street Journal this morning. Well, look, guys, they passed a bill. They're going to fund the government until about March. $0 of spending cuts. All they did was kick the can down the road a couple of weeks while they argue and bicker and make stupid speeches, but there will be no government shutdown today. Congress really didn't want to get stuck in the snow and miss out on their weekend. They had to get out of town yesterday. And so it's amazing how productive Congress can be when their weekend plans are in jeopardy. Isn't that funny? Forget how many people might be suffering from whatever plight or whatever issue. Forget how much pain might be caused by whatever stupid thing that they can fix with the stroke of a pen. Oh, our weekend plans are in jeopardy. Rubber stamp that puppy. Let's fund that government so we can all go home. Congratulations, Congress. Everybody hates you. And the Biden administration will forgive $4.9 billion in student debt for 73,600 borrowers. The Supreme what? The Biden administration says we're going to do it anyway. I thought the Supreme Court put this student loan thing to bed. Nope, still going on. The Biden administration announced Friday it would give $4.9 billion in student debt relief to 73,600 borrowers. There's some details here. Around $1.7 billion of the aid will go to 29,700 borrowers enrolled in the income-driven repayments plan. That is separate from the blanket student loan forgiveness that the Supreme Court struck down. So they're not just ignoring the Supreme Court here. They're taking an existing plan and they're modifying it to make sure that the people get paid back. So is it legal? I'll let the armchair lawyers fight that one out. Those plans are supposed to lead to debt forgiveness after a set period, but historically this hasn't always happened because loan servicers failed to keep track of borrowers' payments, experts said. In addition to 43,900 borrowers who have worked in public service for a decade or more will receive $3.2 billion in loan cancellation, the U.S. Department of Education said. Borrowers in the public service loan forgiveness program have also struggled to get debt erasure. They've been promised due to errors in their payment counts and other issues. The announcement did not specify when borrowers may expect to see that relief. Look, guys, on average, college graduates earn $1 million more than their non-college graduating counterparts. So what this is a massive transfer of wealth from the poor to the wealthy. I get it. You're in debt and college was so expensive and you didn't get the instant millionaire job you were promised when you went away to college. I get all that, guys. But over the course of your life, your earning potential is much higher. And people who are going to be a lot poorer from you a few years from now are going to be the ones paying off your bills in the form of higher taxes and higher inflation caused by the government deficit spending that is going to cover this expense. So congratulations, we are a nation of deadbeats. Isn't that great? We got that going for us. A couple of other ones going on here this morning, guys. We have got Ford adds a third crew to meet demand for the Bronco and the Ranger, but reduces F-150 Lightning production. So Ford continues to streamline their production numbers, change a little bit here. EVs getting cut back again. Despite supposed surges in growth in EVs, they're cutting back their building. Ford will create nearly 900 new jobs and add a third crew at Michigan assembly plant to increase production of the popular Bronco, Bronco Raptor sport utility vehicles, and the all-new Ranger and Ranger Raptor pickups. So we've got internal combustion engines for the mid-size pickups for the Bronco SUV. They're getting scaled up, 900 new jobs. So contrast that with some of the layoffs we'll talk about in a few seconds here. The company continues to balance production to meet customer demand for its broad portfolio of trucks, utility vehicles, and cars with a mix of gas, hybrid, and electric powertrains. Ford is reducing production of the F-150 Lightning, the top-selling electric pickup in the U.S., to achieve the optimal balance of production, sales growth, and profitability. EVs taking it on the chin again this year. Ford expects continued growth in global EV sales in 2024, though less than anticipated, and is preparing to launch next-gen EVs. So, guys, there's been a lot of bad headlines for EVs lately. I mean, the demand is growing. It's hard to remember that in the context of all these stories about them not working and the chargers and they don't work in the snow and layoffs and battery plants shutting down or getting canceled. There is growth, and there should be, because we're subsidizing the hell out of that industry to the tune of hundreds of billions of dollars if you count the supply chain for rare earth metals and everything else that goes into the batteries. But at the end of the day, even despite all those subsidies, people just are not buying enough of them, and these companies are starting to cut back their production and starting to throttle their expectations. An electric vehicle is a great decision for some people and a terrible decision for other people. And the government trying to ram it down people's throats just creates dislocations in markets and makes things unhealthier in general. Let's talk about this one here. Macy's to slash 2,350 jobs and close stores in streamlining effort. Guys, I think we're going to hear more about this. At this point, Macy's business model is so bad and so unprofitable. All Macy's is at this point is a retail commercial real estate REIT. That's basically all they are. They're basically a real estate company. The only value left in Macy's is the value of the real estate they own. The store, the company, the sales, it's basically worthless. And commercial real estate is not having a very good year. I mean, we're seeing drops in commercial real estate values of anywhere from 30 to 80% in some of these office buildings. Malls are not quite as bad as office buildings, but malls have been a story that's been going on for more than a decade. The writing is on the wall for Macy's here. I don't know what's going on. There is an effort to take the company private. My guess is they're going to take it private and just liquidate the holdings and start selling off those assets. Macy's may not be around much longer, guys. They're cutting 2,350 jobs. Now, Macy's does have about 94,500 full-time employees. So, what are we talking about? 3% of their workforce here. So it's not the end of the world, but it is continued writing on the wall. And we've got Wayfair is also getting in on the layoff train right now, but the market is rewarding layoffs once again. Wayfair shares jumped 12% after latest round of layoffs. The online furniture and home goods retailer said it would lay off about 1,650 employees, or about 13% of their workforce. The company cut about 1,700 workers last year and slashed around 900 jobs in 2022. So Wayfair not doing so good either. Look, cutbacks in EVs, layoffs at Wayfair, layoffs at Macy's, some job gains at the other Ford plant, partially offsetting that. But in a nutshell, guys, you add up all these headlines, you've still got net losses in jobs going on here. Despite all the language about a strong labor market, despite the good numbers we got for initial and continuing jobless claims this week, the anecdotes continue to pile up about job losses. Not a good sign for the economy. And I just want to say thank you very much. Hey, buddy, Travis, what's going on? He says, happy Friday, brother. Travis is probably standing right outside this door right now, shivering in the cold because he doesn't want to interrupt my stream. Thank you very much, Travis, for the super chat, the support of the channel, and happy Friday to you as well. Guys, while we're on this subject and while I got Real Estate Mindset up here, by the way, check out Travis's channel. He is one of the best boots on the ground real estate channels that is out there, and he is touring the countryside, including my neck of the woods at the moment, and he got some really good footage with his drone and walkthroughs. We are getting together this weekend. I am hanging out with Travis from Real Estate Mindset, with Todd Sachs from Sachs Realty, with Melody Wright. And we are going to be doing all kinds of content this week. We are touring Todd Sachs' new podcast and YouTube studio. I haven't been there yet, but I hear it is very impressive. So you're going to be seeing some content from that group coming up in the next few hours here. And we probably will, no, not probably, we won't be doing our afternoon live stream at 3:15 p.m. Eastern time today, like we normally do every week, because I'm on the road meeting up with these other YouTubers. But I will have a video to publish during that time slot. So I'll still have something posted at that time. It just won't be a live show. Thanks again, Travis. And everybody, check out Real Estate Mindset. And thank you, the Brojo Show. He says, Mr. Cooper is contacting me more frequently lately with calls and letters to take equity out of my house. I wonder why. Keep up the great work. So they're trying to get you to take out equity. That's, we're seeing this big spike in refis, Brojo. We saw that last week. What was it? An 11% increase in refis. And I got some great comments, by the way. A lot of you guys left me feedback. I got one really good comment in a DM on Twitter. A guy talking about how he was taking out a HELOC to replace his roof. And, he was borrowing at prime plus one. But the big deal was, because he was taking out the HELOC, and yeah, the debt was expensive, but his insurance had gone up so much that he realized by replacing his roof, he was able to bring that insurance cost down enough where the roof would basically pay for itself in 6 years. And so it made sense to tap that home equity to replace the roof to minimize his insurance costs. It ended up being a net win for him. So maybe there's some of that going on. There's probably a lot of debt consolidation going on. People have 25% interest on their credit cards. And so they're rolling that into maybe a refi in their house, cashing out to pay off the credit card bills. Yeah, that's still a high interest rate if they're refining at 6.5%, 7%, but it's a hell of a lot better than the credit card rates. But studies show people who do that just end up running up their credit cards again on top of the home equity that they're tapping into. So I suspect, Brojo, maybe Mr. Cooper is trying to tap into that trend, collect a couple of fees for the refi, make that loan, get you to cover those credit cards with their debt instead. Maybe that's why they're trying to call you and get you to do that. But that's an interesting data point. Thank you very much. By the way, Mr. Cooper, thanks for losing 100% of everybody's information when you got hacked. So if Mr. Cooper's got your phone number, Brojo, that also means the hackers got your phone number and every other bit of information you ever gave Mr. Cooper. Isn't that nice? We got that going for us. Thank you so much for being such good stewards of our data, Mr. Coop. And thanks again, Brojo. I appreciate the super chat and the support of the channel. And thank you, everybody, for having your coffee with the melon heads this morning. I don't have my soundboard, so I have no outro music. But thanks again, guys. No live stream this afternoon at 3:15 p.m., but I will have some content going up at that time, so you can get your melon head fix if you really need it. And thank you, everybody, for the super chats. Thank you to my Patreon supporters for everything you guys do for the channel. And, of course, I got to say, hi, Mom. Hi, Dad. I love you guys. Everybody, till next time, live small and dream big.